Hello and welcome to another TLDR global video. You probably heard a lot about cryptocurrencies, NFTs, and Reddit millionaires in recent months. People are becoming increasingly interested in this burgeoning field, and specifically if they can earn a lot of money from it, with Bitcoin alone becoming a $1 trillion asset class. It's not just people who are interested though. Governments are becoming increasingly interested in and threatened by the growth of crypto. So much so that a number of countries are considering or are in the process of developing their own central bank digital currencies, or CBDCs, something like an official government cryptocurrency. So in this video, we're going to unpack what they are, whether we should want them, and what they mean for the monetary system. If you've been enjoying our global news coverage, then consider backing us on Patreon. With your support, we've been able to expand TLDR, take on new staff, launch this new channel, and make more content. Not only do your donations help support our vision for a better, more independent form of news, but you also get a bunch of perks in return. Learn more about what you can get in return for backing us by clicking the link to our Patreon in the description. So, what are CBDCs? Well, they're basically digital currencies issued by central banks, sort of half cryptocurrency, half normal fiat currency. We did a video on China's CBDC, known as DCEP, last year, when at the time only really China and Sweden were considering it. Since then, they've become way more popular, and today a whole bunch of central banks are either researching or piloting some form of CBDC. With that list of countries including both the UK and the EU.
But this is a decision that will be taken collectively, is that we might well go in that direction, which does not mean that a digital euro is going to be available right away, because obviously we are going to have to address all the issues of anti-money laundering, financing of terrorism, privacy of users and all their information, the appropriate technology that will carry that digital currency. And this is, a project that will probably take us 2, 3, 4 years.
This further is so significant that the Bank of International Settlements predicts that within 3 years, 20% of the world's population will be living somewhere that uses a CBDC. So why are states so keen on CBDCs? Why do they want to swap physical currencies for a new digital variant? Well, firstly, digital currency is far easier to track, which means that they'll be better equipped to tackle stuff like tax evasion, money laundering, and terrorist financing. A digital currency will also provide states with near total knowledge of their economy. This information could be used to form more effective economic policy, with more growth and smaller recessions. But perhaps the biggest reason that states are keen on CBDCs is that CBDCs protect their monetary sovereignty. Basically, digital currencies like Bitcoin and DM threaten states' monetary sovereignty. Let's use DM as an example. DM, originally called Libra, is Facebook's proposed digital currency. The worry for states, especially states with unstable economies, is that citizens might start using DM as their default currency instead of their state's currency, which would limit countries' ability to affect monetary policy. If people aren't using the state's official currency, then increasing supply, manipulating interest rates, and all of the standard economic levers become a lot less effective. However, official state CBDCs have some advantages over DM and other cryptos, so states are hoping that CBDCs can dissuade citizens from abandoning their national currencies and turn to the digital dollar instead. Which leads us nicely onto the next question. Why would citizens agree to CBDCs? Well, we've already mentioned one advantage. They might mean better economic conditions for the whole country. They're also more hygienic than banknotes, and it's plausible that states might legally require the digital currency, entirely phasing out the physical variant. But perhaps the biggest advantage to individuals is that CBDCs will be cheaper and more convenient. At the moment, there's a whole infrastructure of third-party private companies that facilitate mobile payment. Think of Apple or Google Pay in the UK, or WeChat Pay in China. As well as that, there's commercial banks, who act as middlemen between the central bank and the individual. Today, these transaction costs cost each person about $350 a year. But if the state decides to facilitate a direct connection between the central bank and individuals instead, then this should, in theory, mean lower transaction costs, making things cheaper and easier for individuals and businesses. But CBDCs aren't all rosy. There are some possible downsides, especially if you're a libertarian. Giving the state total information about their citizens' economic activity could be a slippery slope into a totalitarian dystopia. Imagine instant e-fines for bad behaviour, or limits on what sorts of things you can buy. CBDCs might also have some possible disadvantages for states. Firstly, states with less stable currencies still risk their monetary sovereignty being undermined by larger states' CBDCs. Take Turkey, for example. Thanks to Erdogan's aversion to high interest rates and his habit of sacking central government bankers, the lira is currently having a bit of a crisis. In response, Turkish citizens have now moved towards the US dollar and now keep more of their savings in dollars than the lira. You can imagine how, if a digital dollar was easily available, Turkish citizens wouldn't just save in dollars, they'd use digital dollars for all of their transactions, and the dollar could become Turkey's default currency. Essentially, an easily accessible digital dollar, or maybe even a digital euro or digital pound, would be more likely to replace an unstable state currency, thereby further undermining states' monetary sovereignty. The final possible downside to CBDCs that we're going to mention in this video is the impact they'd have on traditional banks. Essentially, commercial banks worked by storing lots of money, and then, assuming that everyone wouldn't need their money at once, lending some of that money out to other people. This is a process known as fractional reserve banking. Basically, only a fraction of a bank's deposits are backed by actual cash available for withdrawal. The rest is loaned out, and banks make money on the interest from those loans. This system has worked pretty well and basically fuels the entire economy. But CBDCs might remove the need for bank deposits, upon which fractional reserve banking relies. Citizens might just use their state-issued digital wallets and store all of their money in there, which could undermine the entire system of money lending as we know it. Now, we should be clear here, no one knows what all of this will mean. No one knows what role central banks might play in lending CBDCs, whether venture capital could replace bank lending, or whether banks will necessarily collapse. But it's worth noting that CBDCs have at least the potential to completely upset the financial system, even if we don't precisely know what that means yet. And if you'd like us to make a full video on what it could mean for the economic future of, well, the whole world, then let us know in the comments below. Also, let us know what you think of these digital currencies. Should governments be investing in these new currency? Or is it a sign of future tyranny and an endeavour that should be left to the free market? Let us know your thoughts in the comments below. As always, be sure to subscribe to the channel and hit the bell icon to be notified every time we release a new video. Special thanks to our Patreon backers who make videos like this one possible. And if you want to see your name at the end of videos, then you too can back us on Patreon. The link to that's in the description.